C, it is a C, it is a indirect break, complex pullback with fair value gap left. That's why price respected that candle. So we can use this zone, right? Price respected this, made another low. Now we cannot use this because it is not a complex pullback, it is a direct pullback, it is a direct breakdown. So we cannot use this zone. Then what happened? But price respected that. Price often respected smart money trap areas to generate more liquidity. Hey everybody, so today in this video I am going to talk about inducement, which we also know as smart money trap. So what is inducement and how they made, we will talk about everything, and why it is necessary, because inducements are everywhere, and if you do not understand inducement liquidity traps, it means you will get trapped back and forth by the market. So it is very crucial and important to understand inducement so you get the right entry. Okay, most of you guys made the right bias and do very well analysis, but during the entry you get induced and you get liquidate, which is the issue many people are facing. So that's why I am making this video, so you will get the complete clarity today about traps, about smart money traps, liquidity traps. Inducement is just a fancy word people use in the smart money space to look cool. It is just simply a liquidity trap, and I will tell you about inducement completely, like how many types of inducement happen and when they happen, everything. If you are new to my channel, let me introduce myself. My name is Harsh and I am a full-time trader since last 5+ years. So you can trust me whatever I am saying, and you can also test the things which I will show you. So let's start the video. So first of all, what is inducement? According to Google, inducement means to induce people into doing something, which means smart money is inducing other pupils to do certain kind of action. So that's the definition of inducement, which is also known as traps. So just to keep things really simple, we will call it trap. So there are 3 types of traps. Type 1, first we will understand in theory, then we will go to the chart and we will get the clarity. So stay tuned. Type 2 and type 3. So there are 3 types of inducement. Type 1 inducement is simply market making higher highs, higher low, higher highs. So this is the inducement. Whenever market is just simply doing breakout, it is inducement. And if market is doing things like this is not inducement. Can you spot the difference? In this price grab liquidity, price made simple pullback. This is the type 1. So type 1 is, this point is trap. This point is trap. Type 2. In this what happened? Price make a big candle and then make inside bars and then gave breakout. This is type 2 trap, type 2 inducement. Okay, and last we have our type 3. Type 3 is simply price do this, price make complex pullback, then do breakout. It is also inducement. Why? Because price do not have above liquidity point which support this level. So what happened when these breakout came, market do breakout, you see a breakout, you set a long entry and then price liquidate you. This happened because price do not have any liquidity above to support this point. If price have a liquidity above, then price will use that as inducement and then respect this zone, and then your trade will work. So the simple understanding of any point is you need liquidity above or below your point of interest. So for example, this is your market structure, this is your breakout, right? Now if you want to use this zone for your longs, pay attention. So if you want to use this zone for longs, you need liquidity above. It means you need a one more extra break which market will use as an inducement. Then you can use this zone. If you don't have this above liquidity, then price will liquidated your zone and then you will get trap. Similarly, let's say price have liquidity grab, break of a structure. Now you want to use this zone, so you need a liquidity above. If you do not have this, then this zone will not work. If you have the liquidity above, then your zone will 100% work. I mean 99%, because there is nothing 100% in the trading. So if you have inducement above or below your zone, it means they become high probability zone, because smart money have a level which is liquidating people. They are removing dumb money, weak hands early, and then you can take your entry. The problem with this smart money space, most people teach you this type of pattern. Price did breakout, price did liquidity grab, and you can sell here. No, you cannot sell like this. You need a liquidity point below, then you can sell. If you do not have inducement, you cannot sell, you cannot buy. You need proper inducement. So this was our type 1, this was our type 2, and type 3 I told you. In the type 3, price make complex pullback. So we have two type of pullbacks. This is simple pullback, this is complex pullback. And in the type 3, price do complex pullback, and people think it grab liquidity, we can mark our zone and we can use it, but it won't work like that. Price will fuck your zone. You need liquidity above, you need inducement, then price will took this and then continue. Okay, and one more thing, sometimes what happen, it is very rare, it is like a textbook. In that case you can direct use the zone. In this what happen, price made higher high, higher low, in this what happen, price made high, low, complex pullback, and in that what happen, price did break of structure, then we have our zone. So if you notice one thing below, price did break of a structure, and above our zone we have fair value gap left. It means now this point will use as an inducement. Market will grab this and then continue. Again, look the difference. This is simple, this is complex pullback. Price made break of a structure. I told you if you want to use this zone, you need inducement above it, right? But in that case what happened, price did indirect break. It means we have the gap left already, so now market can use this as inducement and then further push. So these are the type of inducements. Let's summarize once again, then I will show you the charts. Type 1, simple inducement, okay, it is a trap. Type 2, market make candle big and then inside bars and then breakout. Type 2, inside bars are useless, they do not work. Never ever use inside bars as a liquidity. Inside bars meaning is the candle failed to break any high or low of the previous candle. It means there is very less amount of money in that candle, so do not use inside bars, totally avoid. Type 3 is complex pullback. Again, this is again inducement. So type 1, type 2, type 3. most of the time you will find this one and this one. This is rare. Okay, so let's see some chart examples. Guys, I told you need to understand inducement. It is super important for you, otherwise you cannot get the right entries in trading and you will struggle for years. Okay, believe me. Now let me show you examples on the charts. So this is the S&P 500 1 hour chart. Here what happened most recently, price did a down break, impulse, fine, made a pullback again. I told you this is what our inducement. Then we have our zone, right? Whenever we have inducement at those points, we use our breaker. In this case, this is our breaker. Then price took the inducement, broke to the downside, no body closing, just wick. Wick means our liquidity will get sweep and then fall. Now in this case it is sweep, it is a break of a structure. Now what happened here, if you notice carefully, price did a breakdown. How did it price did a breakdown? How it is happened? See, it is a see, it is a indirect break, complex pullback with fair value gap left. That's why price respected that candle and made another push. Now it did breakdown. Now we have nothing. Now what happened? Price is just falling. Now if it made new low, then we can use this zone for sell. It means this will use as an inducement. It is inside bar in 1 hour chart, but if you drop down to the 15, you will find this is inducement. This is all inducement. You maybe know this, like we have a upside build up, downside build up, sideways. People call it trend line liquidity, but it is the same thing. So someone can say it is a trend line liquidity, but it is inducement, right? Let's see more examples. See, in this case S&P 500 did a breakdown. Okay, then price went lower, break another low, which is just wicks, no body closing. And even if it was body closing, it does not matter, because this thing will use as an inducement for this zone. Then what happened? Price took inducement and then start falling, right? So that's why we use premium discount tool. It means you can sell only from premium and you can buy from the discount. And when the order flow is bearish, you put your premium discount tool, and then you realize that below 15% you have inducement, so you cannot use these locations. Alright, so you can use premium discount tool. It is very helpful and it will increase your win rate. Let's see some more examples. See, once again S&P 500 did a breakdown. I told you, what is this? We have bearish order flow. Pay attention. Complex pullback, breakdown. So we have complex pullback. It means we can use this zone, right? Price respected this, made another low. Now we cannot use this because it is not a complex pullback. It is a direct pullback. It is a direct breakdown. So we cannot use this zone. Then what happened? But price respected that. Price often respected smart money trap areas to generate more liquidity, and then after 2-3 breaks it liquidated them once, then more breakdown. We cannot use this, no QM protected, nothing. Then what happened? Price built liquidity by respecting the fake zone and then later swept both, it means we can use, above we have fair value gap, it means we can use this zone, then S&P 500 tap into that and then further fall. Now because we have complex pullback breakdown and inducement below that level, so we can use this zone which I showed you in the previous example. So that's it for today guys. I hope you understand inducement, how they work, types of inducement, and why it is necessary to important to understand the inducement. Let's summarize the video. We have three type of inducement. Type 1, normal direct breakdown. Type 2, inside bars breakdown. Type 3, complex pullback breakdown. So most of the times you will find type 1, this is very general, and type 2 and type 3 are rare because they sometimes works and they works best. So if you found type 3 like price is making complex pullback and you have a fair value gap, you can use this. So main is type 1 and type 2, so always pay attention. The one general rule is you need to remember is never use any point of interest without the inducement above or below that level. So for example, if you are going bullish and you have this point of interest, so the general rule is you need inducement above your POI. If you have inducement, you can use it. If you do not have, do not use this POI because it is a smart money trap. For downside, you have your POI, so you need inducement below that. If you have the inducement, you can short use this, your trade will work. If you do not have inducement, do not use the zone. Alright, and if you have something like this, price making complex pullback breakdown, you have imbalance, valid imbalance, you can use this zone, then no issue, because in that case price already collected liquidity and you do not need inducement. Alright guys, so thank you for watching. If you like the video, please subscribe the channel and comment me next topics, so I will make the more videos for you.